All aboard! Financial freedom awaits. MyTrade proudly presents the Navigator, the newest, easiest, and brightest fundamental tool from MyTrade's renowned research team. Be guided in your investing voyage. Get the best stock picks, sound long-term strategies, and valuable information about the companies that you're buying. Follow the light. The Navigator. Better your tomorrow.
Abacus started about 26 years ago. There was one vision when I started Abacus, to provide value to customers, to be the first Filipino brokerage that will provide research-based recommendation. Because at that time when I started this business in 1992, most of the brokers were fairly small, family-owned, and very few actually hired full-time research people. Abacus was the first. The thing I'm most proud about is we have a very strong research team. One of the best you can find. People whose dedication to the business and whose passion for the business. We launched MyTrade to provide customer, number one, convenience. Number two, information. You need to know what's happening in the market, and we want to provide them access to market data, everything that they normally will need to go to the newspaper or to the website to study, all very handy, very portable, and very easy. And with increasing mobile internet speed in the market, this has become almost part of everyone's life.
We have a very versatile platform. If you are someone who's basic, you're not a techie person, you have to put the MyTrade mobile app on your phones because you can see there the basic ones, how to trade, the stocks, the gainers, the losers. You can see your portfolio, and you can even log in 5 seconds if you have a good ISP by using your fingerprint. We invest so much with platforms and technology because we know that it's an ongoing development, and we value innovation and also customer service.
One important milestone for Abacus is the launch of our online trading platform, MyTrade. Historically, Abacus has been very strong in the institutional and high net worth retail stock brokerage business. And launching MyTrade is our way of reaching and sharing our expertise to the smaller retail investors.
I think we analyze just a little bit better. I think there are angles that we look at that give us insight into companies a little bit better. And then sometimes there's a lot of information in the market, and most of the time people tend to look at those pieces of information just one at a time. But our strength is that we are able to piece together all these bits of information into a cohesive investment idea. And I think that's probably our biggest strength. We like to make money, not for ourselves, but for our clients. We make investment recommendations to clients. First thing is new investors should do their own research, because it's not enough to listen to research analysts, or some would be called market gurus. It's not enough to listen to those types of people. It's really important for someone new to the market to do their own research, because you'd be more comfortable about your investment making decisions. Second, it's important not to think of investing in the market as getting rich, but rather it being a process that weaves into your entire personal life. So it's not just about making money. It's really, as we say, investment is really a lifestyle choice. Third tip, just remember, it takes time. There is a very steep learning curve when it comes to investing, and you shouldn't be discouraged if you lose money on some trades, because it's just part of the process.
I chose MyTrade because it is complete. So whenever I want to execute a trade, first I would take a look at good fundamentals, and whether it's the right time on the technical side. On the fundamentals, we have an experienced research team, and for the technical side, the MyTrade platform provides a lot of tools. These tools really help me in my decision whether when to enter the trade or not. I've had several unfortunate experiences with other brokers. First, I could start with the customer service. Sometimes even, I just want to order an odd lot. I have to email or have to look through the facts. In MyTrade, I would just press the icon below and there's a live chat for the customer service, so the experience is really great. Some brokers would also have downtimes during market hours, so this is important for me to execute my trades, and being down is an opportunity loss for me, and for me that's a big deal in trading.
You don't need a rocket science-based system to make money. What you need is a sound mind that says, I like this stock, fundamentally it makes sense, and technically it is sound to go buy at this level or take my profit and things like that. And that's what we provide. We provide you more than just a computer system. We want to provide you with a group of people who are strong in research and who are strong in fundamentals and technicals. The whole purpose is to provide you with system, with value advice, with great customer service.
For Generation Z members who are actually new to investing, I really think that MyTrade provides a really friendly platform for those who are beginning because it's really neat. I really think that MyTrade provides exemplary service in terms of providing research and the like.
One of the reasons why I opened an account with MyTrade was because kay Sir Nicky, I really like yung mga market reports niya. Nakita ko rin naman yung increase ng prices ng mga ni-recommend niya. After nakita ko yon, all the more follow yung mga recommendation niya. Ikaw na naman, naging positive naman yung account ko. I'm still in the middle of my journey on how to trade stocks. I was really impressed the growth ng portfolio ko, and highly recommend that you guys might want to also let Abacus manage your money.
I chose MyTrade simply because they have an app. And as a person who is so into technology and apps as well, I find it convenient. It's just within my pocket and I can just check how my stocks are. Plus, the easy part is that you can also deposit money and trade and buy as it is. When I transferred from the previous the former one that I've been using, now I get to see my stocks better because again, it's just an app. It may not be as big as others may have under their stocks. At least this one I have more visual reference on how it is, so it will motivate you to add more or to buy, to trade. So there's more action to it rather than it's just in a dashboard.
I started investing in stocks because I wanted to diversify. My money is either in the bank or in life insurance companies. Being a mother of two, I wanted to have my money more secured and I wanted faster returns. So a friend of mine convinced me to try the stocks. I would encourage others to try MyTrade because it's an easier way of investing, your money secured, and it's very convenient.
Hello, everyone. Good afternoon. How are you guys doing? This is yet another online streaming brought to you by MyTrade. If you have seen it, it's just the first time that we will be launching. Actually, this is under the Chairman's Corner, but we would like to launch this new segment called the Roundtable, wherein you will be asking questions with our analysts in the market. But today, we will be with our chairman, of course, the Roundtable. What first came to mind when you heard the our newest segment, the roundtable? Can I see some comments in the comment section below? If this is the first time that you're watching us, please grant access to StreamYard so we'll be able to see or flash your name on screen. And good afternoon, Melvert, Baklan. Yeah, just do share with us what is the first thing that comes to mind when you hear the word the roundtable. Good afternoon, blessed trader. Yan, yung mga our regular viewers. Please share with us to your families and friends. Later, we will have a little prize for some of the pop quiz that we will have later on. And then afterwards, once you have shared with me the first word that comes to mind when you hear the word the round table, I will be calling in my colleagues one by one, and then I'll be asking them the same thing. Ayan, di nila to alam. So, by the way, this is like a coffee talk with Sir Paul, of course, and with you guys. So you can get your mug. We will have our coffees with us while we're talking to you guys. This is just like a coffee talk. So it's just gonna be chill. Wala tayong there will be no discussion, but we will be open to all the questions that you're gonna have. Ayan, sabi ni Eric Miguel Aguilar, the story of King Arthur and his knights come to mind, which is actually what we have in mind when we put the name the round table. And good afternoon, good afternoon, June Eledia, watching us from KSA. All right, we're now 184. Do share us on your wall. So people, I think, with the same feather that would love to hear about the market would be able to watch us, especially that we are launching this in public. We would like you to share with you what we are giving to our MyTrade clients in order for them to have a better picture in terms of trading and investing in the stock market. Yeah. Hi, John Don. Hi, Regan. Thank you. Keep the comments coming in. So without further ado, let me call on one by one our analysts who will be with me today before we call on Sir Paul. Sige, first off, I want to call on the only girl among the analysts. Yeah, gusto ko yung mug niya. So, I know na ayan, hi Bess. Can you give us the picture of your mug? Yeah, tingnan natin ng mga Yun! Sino yung BTS fan dyan? So, Bess will be with us. Next in line is ito si Herman. Hi Herman. Please go on stage. This is one of our senior analysts. Yeah.
Hi.
Hello Herman. Ano naman yung mug na binitbit mo today? Yeah, we're 200 right now in the audience. Keep them coming. Ayan. So yung mga sprinkles ba yan? Parang hindi sa'yo yun, Herman.
Pagawa ka ng MyTrade mug.
Next. I don't know.
Pagawa ka ng MyTrade mug.
Oh. Paging Sir Paul. MyTrade mug. Okay, next is nasa backstage po siya. So, naririnig niya tayo. And then next is the youngest. Ayan, si Rainier. Rainier? Hello, Rainier. So, ano ang mug? Mug ba yung dala mo this afternoon? Ayan. Oh, so, si walang aagaw. May pangalan. Walang aagaw sa mug niya. Share with us your favorite mug if you're watching us from home. And last but not the least, of course, yung the King Arthur of the Round Table. Let me call answer. Bago pala lahat, nakalimutan ko.
Oh my God, lagot ako dito. Our technical analyst, of course, maraming magagalit sa akin ng mga inaabangan siya. Hi, Isaiah! Sorry. Si... Ayan, okay. Sabi ko parang hindi even number, parang may kulang. But pakita nga, show us your mug. Ayan, the turtle, earth lover daw siya. And last but not the least, ito na, totoo na to, our chairman, our beloved Sir Paul Su. Hi, Sir Paul.
Hi.
Hello, Sir. Siyempre si Sir, ayan, may mug din. Nakikita niyo ba yung mug ni Sir Paul? It's from, I think, he said it's from Tokyo.
From Kyoto.
Yeah,
It
from
tells
Kyoto,
you we all miss
Japan.
traveling na talaga. This pandemic is too long, so medyo matagal na time to travel.
Agree. So you guys, if you have your favorite mugs with you, take a picture of it, share it on the comment section. Mamaya we'll try to choose and feature it on screen. Ayan. So today, as mentioned a while ago, no, we will have our Q&A, and then later on we'll have a break. While it's break, mga water break ng mga analysts, we will have pop quiz questions that we will give you. So it can either come from our latest report, it can be from the newsletter that we have. So please make sure titingnan namin if you are following. Given that those questions are only visible to our teka, nag-feedback ba ako? Ayan, may feedback pa. Given that, so we will make sure that our clients will be the ones to participate in the program. We would love for the rest of here, sino pa yung hindi members ng MyTrade, we would love for you to join the next time. So we're looking forward for you to have to be with us, and later on we will tell you what are the perks that you can have if you have a MyTrade account. Ayan. So we will open now we will open now the time for the questions. You can start asking questions. I think some of the questions were asked dun sa link that we have given a while ago. Yeah, if you can also post the questions here na on screen. Sige, while you're thinking, eto, meron akong a question for the day. What is the last stock that you traded? Yeah, if you are in your tabs, if you go to menti.com, use the code 96720-543 and answer which stock did what stock did you last trade or buy or sell? Ayan, may mga nagsasagot sa comment section. You can, if you want your answers to be seen on screen, this is a word cloud. So lahat ng ipapasok nyo na answers dyan, lalabas sa what is the last stock you traded. So that's menti.com. Use the code 96720-543. Ayan. Right now, we're 229 viewers as of the moment. Sabi, yeah, tech. 80. CHP. May nagsabi CHP. JFC. Sabi naman ni Cecil Likayan. Yan. So while others are answering the question, please make sure you can post your questions now on screen. So if you have a question from the recent traded stock that you have, please go ahead. Ayan, sabi Converge. Telcos, I think, nag-boom for this week. Tama ba? Sino ba ang telco? Sino ba nagko-cover ng telco? Ayan. Ayan, sir. Can you give us an idea, ano ba yung nagiging source ng pagtaas ng mga telco stocks, Herman? While people are, warming up to ask questions to us.
I think it's not just one factor. Parang confluence siya ng confluence of factors yung nagbo-boost sa telcos. First, I think is the most obvious. It's because of the fintech craze. So parang because Globe and Tel have their own respective fintech arms, so GCash and Paymaya. And if you're following the news, valuations for these fintech companies have been skyrocketing. So the market has been setting very high expectations on these fintech arms of these companies. And also another factor that's pushing these prices, or these stocks rather, is the some business groups are pushing to lift the foreign ownership restriction for telcos. So currently, telcos are considered as a public utility. So foreign ownership restriction is set at 40%. But if this restriction is lifted, foreigners can increase their ownership beyond 40%. So I think this is also one thing that's propelling these telco companies.
All right. Thanks for that, Herman. So I think some of us will have an idea what are the factors that considers the price movement for the telcos. Uh, will it continue for the on the next coming days? You think?
I think there's it's still a hot topic as of now. So I expect the stocks to still be very active. So I think there's people can take advantage to trade the stocks, but still be mindful of valuation. So as I think we discussed it today in our short takes, or if not today, within this week, we discussed how much we expect these companies to increase. So if we see that the valuations are way overboard, we think it's time for clients to take profits.
Ayan. So I think right now you're still thinking of the questions to ask. A while ago I was asking, 'di ba, what first thing that comes to mind when you hear the word the round table, because it's not often used. And I'm also curious kung ano yung sasabihin din ni Sir Paul when he hears the word the round table. For first and foremost, before sumagot si Sir Paul, can I ask you guys like just one liner, something that comes to mind when you hear the word round table? Kahit anything top of mind. Yan. Dahil sino yung pinakabata? More, apart from myself. Char. Si Rainier, first thing that comes to mind when you hear round table.
Something
Naabutan mo ba yun?
important.
So, literature?
Yeah. Parang ano, the discussion is something important. Something like that.
You cannot miss, parang ganun.
Yeah. Or
Ayan.
parang ano
Buti
talaga
ka-
siya, more on for strategy.
For strategy. Ayan. Yung muntik ako nang makalimutan kanina. Ay, sige. Ano yung first thing comes to mind?
Nakamit si IC.
First thing comes to mind is nights lang.
Yung mga technician matipid talaga magsalita. How about Bess?
Actually, first thing that came to mind, yung mga family dinners. Kasi usually, kapag holidays, usually sa amin round table yung hapagkainan. So, siguro din doon galing yung round table discussion kasi usually you talk about different stuff when you get together. So, yun yung tumasok sa isip ko.
Yung may lazy Susan.
Oo.
Di na yun uso ngayon eh. How about Sir Paul? Sir Paul, what do you think when you first hear the word round table?
Well, first, let me welcome everybody to this round table. For me, the reason why we call this a round table actually is exactly what we're doing, getting people to share their thoughts and their ideas. So you call for a round table discussion so people can be informal, they can talk about the things that interests them. And in this case, what interests all of us is the stock market. So keep in mind, this is a round table. There's nothing very formal about it. Everybody is free to ask what they want to ask. So let's make this productive. Everybody coming out from this learning new things. For those listening to us and the group and ourselves, we can get ideas as well in terms of what we think and where the markets can move. Just to add to Herman's answer, why the telco has been active, and for that matter, a lot of the new IPOs has also been active. There's been a lot more foreign buying, although it's sometimes very pointed at one or two specific issues. But the volume that they buy consistently over days, like anything, the price will move. Don't forget, the market price is dictated by the very first rule of economics, supply and demand. So as long as the demand is there, foreigners are buying 100 million, 200 million, 150 million almost every day. That particular issue will go up, and all the punters will follow. That is something quite important. So, Sheena, go ahead and let's get this roundtable discussion started. Thank you.
All right. So for the first round of questions, the first one, he's asking about REITs. This is from Tyrone. He's asked, of all the REITs in the market today, A-REIT, DD, MPR, FL REIT, RCR, and M-REIT, which one has the brightest future? Yeah. So who wants to answer?
Since I'm covering the property sector. Okay, so thank you, Tyrone, for the question. I think we actually wrote about this specific question. I think last week, if I'm not mistaken, or the week before that. Okay, so I think for me personally, I'm very excited for MREIT, especially since they dropped down their final offer price by 27% to 16.10 from 22 pesos. So I think that that makes the implied dividend yield very attractive. So I think it even puts MREIT on top of RCR and A-REIT. And then in terms of if A-REIT's stock performance is any indication, I noticed that the market prefers a REIT that has a constant asset infusion from its parent. So if that will be the determining factor for the success of a specific REIT, then I think the runway for growth for MREIT is very there's a long runway for growth for MREIT because MEG has the most expansive office portfolio. I think the current portfolio of MREIT is around 200,000 square meters of office portfolio, whereas the parent still has around 1.2 million square meters of office space to infuse in the coming years. So I think in terms of growth outlook, the prospect is very bright for MREIT. And also, if you read our short takes about it, it also has the best annual rental escalation. So I think that's a factor of that's attributable to the quality of assets of MREIT and also of its location. I think it very much has something to do with its assets in McKinley Hill, which dominates the share in office supply in Metro Manila. It has 25% as of Q1. So because of MREIT's share in its office space in McKinley Hill, it was able to secure annual rental escalation of around 5 to 10%. So that is even better than A-REIT's and RCR's 3 to 5%. So in terms of organic growth, MREIT I think has the best. And in terms of inorganic growth, MEG has the biggest portfolio to infuse to MREIT. I hope that answers your question.
Okay, so the questions are already coming in. I think nag-warm up na sila, but they also shared what their thoughts are when it comes to the round table, and nakakatuwa. They have like an important discussion, meeting, an important meeting with the knights. So kayo daw yung knights today. Ayan. So there's another question from Regan. I think this is very timely. Lobaton, how will the Evergrande saga affect the short, medium, long-term market conditions in the Philippines? I think, sir, would you like to answer?
This actually is a property issue. It's still Herman's coverage. But let's just wrap up. Let's just have an overview of what the Evergrande saga is. Evergrande is the largest property company in China. When we say large, I mean it's really, really large. Unfortunately, any property company cannot grow unless you are able to fund your growth, no? Because nobody builds a building on a cash basis. Most people have, even other people will have like 10% equity, and then you try to borrow as much as you can. So Evergrande obviously has a huge debt, no? $300 billion, if I recall correctly. And they had they borrow essentially using the bonds and banks, no, and so on and so forth. So there's a maturing bond that is coming due, and because China, and for all intents and purposes, everybody in the world affected by the pandemic, the banks are not really lending. So there's doubt about its ability to pay. So Herman, you discuss how it will affect about the local property market in correlation to this these possible issues.
Okay, thank you, sir. Regan, Lobatan, yeah, thank you for the question. I think we also wrote about this twice this week, but just as a recap of what we wrote. Yeah, as Sir Paul mentioned, Evergrande is actually the second biggest real estate developer in China, but is also the most indebted developer in the world. So yeah, as Sir Paul mentioned, it has 300 billion worth of debt, and I think recent news I read is that it is about to default on some of its interest payments due this month, and then so some are already comparing it to Lehman back in 2008 when the U.S. government allowed Lehman to default. But I also read one interesting analysis wherein it says that Evergrande should not be as severe as Lehman because of I think two different factors. First is that in terms of asset holding, so Lehman is mostly holding financial assets, so they're holding securities backed by mortgages, whereas Evergrande is holding a huge what you call this land bank. So the government can still prefer to, or can still opt to buy this land bank so that there will be cash inflow for Evergrande, which will help sustain its business operations. So I think I think that's one of my main takeaways in the recent analysis that I read. And then second, as we highlighted today in our short takes, is that we think there's a chance that the government, or specifically President Xi Jinping, will not allow this huge of a company to default because of the potential systemic risk. And if you take a look at its debt, it has a 300 billion worth of debt, and because of its position and because of its size in the industry, it has a lot of linkages. So there are many suppliers, there are many creditors, there are many home buyers that will be affected if ever this company defaults. And also, its debt is also not only restricted to domestic, so there are also offshore investors. So yes, to put simply, there are really lots of potential casualties if ever Evergrande default. So we think there's a chance that Beijing will step in to bail out the company.
All right. So for the property sector, Isaiah wants to will share the chart for the property sector. Wait.
China. The question, Herman, is how will the Evergrande saga affect short, medium, and long-term market conditions in the country, in the Philippines? So we've spent all the time discussing about China, but not about local conditions. So, that's the question. Let's go answer the question. Thank you.
Yeah. Okay. Yeah. Sorry about that. Sorry, I missed to answer your question specifically. Okay. So in terms of short and medium term, actually, we noticed a parang spillover of negative sentiment when the Evergrande issue came to light. There was a spillover effect in the global market effect, and also including the Philippines. I think the country was not spared from the negative sentiment. But I think I think it may pose a headwind in the near term, and I think the sentiment will be more positive once an agreeable solution is put forward. So, and then also I think just to share with you, I also read the recent news article wherein Evergrande also said that they came up with an agreement on how to settle the upcoming interest payment that is due this month. So I think that's something positive, and which may have supported the rebound of global markets, including the Philippines. So yeah, so every time an agreeable solution is put forward, I think that will also be positive for us.
Herman, let me just add, Regan, I think what may be relevant to a lot of other people is seeing what has happened in China, what is happening now with the property company in the Philippines. First, I think you notice when REIT came out, then everybody else started joining the bandwagon of REIT. Doing a REIT program actually adds a lot of cash infusion to the property company. They're able to liquefy long, rental properties and get cash so that then they can build again. You also see that there's quite a few of these property company who's issuing long-term preferred issues to primarily raise cash funding from them. These are things that is happening in the market. If you take a look, a lot of companies are raising funds through long-term preferred issuance of bonds, and for the property company REITs, exactly what they're trying to do is just to make sure they have enough cash to go through until the economy normalizes, which may take a year and a half in the full term. So I don't know if that answers your question. I think the local companies, property companies, are fairly well positioned for the pandemic. They've raised all the money that they can, and I'm sure they still want to raise some more as long as the market will fund it. So, and we don't have that size that they have down there. Thank you.
How about the technical view for short term and medium term?
So recently, the key support for the property sector is about 2,927. So this level needs to hold. It's been having selling pressure recently since basically the July high. So this is a key level to break out from, as you can see from the chart. So the next support would be at closer to 2,550, which is almost a 13% drop. So it's a very important level here at this moment.
And can I add?
This.
If you also were able to read the short tips today, there was a note on Evergrande, and it was noted there that for the local stocks that can be affected by whatever contagion that might happen if ever Evergrande would not be bailed out by the Chinese government, the most affected, we think, would be the ones that are with the local companies that have exposure to the Chinese consumer market, specifically Jollibee, which has a lot of stores in China, and SMPH that has malls there, and I think also some residential properties, but not as much I think as other property companies. I'm not sure, Herman. So that's going to have those are the stocks that would likely have a direct effect on them if ever Evergrande would Evergrande's condition would worsen. But as we're expecting, there would be some relief probably from the Chinese government. This is something that should be monitored. But so far there hasn't been any um, concrete or tangible effect on those specific companies so far. Sino nakamute ka?
All right. So, do you have guys anything to add? Okay. I think Regan, if you have more questions, just please feel free to ask us. Next is from the backstage. What stocks are you expecting to increase with the upcoming 2022 elections? I think some of the candidates are already showing their ads, and what do you think will have an impact starting right now this season? Will it be um are we going to have like a run again for stocks like GMA? Who's covering if
Yeah.
we're covering it? Yeah.
Yeah, traditionally we look at the media companies to have a positive effect on their earnings because of political advertisements during the election period. But as we also saw in previous election periods, even if this is a presidential election, which has which potentially would have a lot of candidates that would buy a lot of advertisements. As we saw in previous elections, much of the advertising or campaigning has moved from traditional TV or radio ads or even print ads to social media campaigns, especially with the increase in internet use during the pandemic. So we think this will be the effect on companies like GMA, maybe even ABS, although their reach has lessened because of the loss of the franchise. There will likely still be some impact, but not as pronounced as they were in previous years. Um, Also, usually consumer companies benefit from from campaign activities because of the need for for their services during campaign events, but because of the quarantine restrictions, these gatherings or meeting the avance, mga stuff like that, will probably not be as grand or as big as before. So the impact there would also be probably muted. Can you add? Do you have other things to add, Rainer Hermel? Nawala si
Uh,
Sheena.
yeah. I think we've covered most of what we're expecting for consumer, but apart from those events, the candidates, I think there's much more now compared to the 2019 one because again, it's a presidential. Um, you might see more giveaways, maybe. Since it's a pandemic now, we might see a more different approach from them. So we're not entirely sure how it will pan out. Uh, but I think we're seeing some of the consumers gaining momentum now. So we've seen CNPF, Monde, even Gold, they're starting to move upwards. And I think the market's anticipating or trying to rational that in with the coming elections, and we might see more of it as we move along through to the election.
All right. So another question from guys, if you happen to already post the question to us, please repost it again so we'll be able to read your questions. There are a lot of questions coming in. Okay, from Glenn Marvin Teng, do you think all HC is a good long-term stock pick to keep in one sport? I think this was posted this today by on Map. So who's covering all HC? Is it
Uh,
covered? Do we cover it?
I don't think we're officially covering it. So,
Sige. I actually wrote about it recently.
Mm-hmm.
Okay, so I think we wrote, yeah, we also wrote about it recently, and what we explained basically is that um, me personally, I think the market is speculating uh, all HC's REIT prospects as it has the company has been investing heavily on warehouses, and as pioneered by JFC and Double Dragon, they're actually planning to introduce Double Dragon's Central Hub Properties as a REIT, as a joint venture. And I think the market is taking its cue from that. They're thinking that all HE will also be introducing its warehouse properties as a REIT. And management also said that its warehouses are candidates, potential candidates to be introduced as a REIT. So I think that's one. That's one that's pushing up the stock. And another is that AC also incorporated its logistics arm, and we think that there can be a play between the two, all HC and the newly incorporated logistic arm by AC. But these are still purely speculation, so we still have to wait for management's announcements. Now, that's to explain the recent uptrend for all HC. But going back to your question, for this, honestly, we haven't discussed yet with management as to what their long term prospects are. So I think that's essential before we can recommend the stock as a good long term play. So yeah, honestly, we haven't discussed with them what their long term prospects are, but we think the stock is already at a very expensive valuations as of the moment. So we would prefer to enter at
Okay.
much lower levels because I think the speculations are very high at the moment.
I think Herman, we didn't catch the last few words that you said. Nag-freeze. But
What's
what was the
last?
just to make sure? I'm not sure if it's just me or nag-freeze kay.
Oh, okay. Okay. Ano yung last na
The last
pumasok?
part where it says we still don't have the final um and then that's it.
Okay. So, sorry about that. What I was saying was that we haven't discussed yet with management to ask about their long-term prospects. So I think that would be essential before I can answer your question. But as I said earlier, I think valuations are very expensive at the moment, and we would prefer to enter at much lower levels.
All right. So that will be the last question for the first round. I hope you guys just keep the questions coming in. So kami naman, it's our turn. So as we said a while ago, we will have our pop quiz for the day. So we have at least 4 pop quiz. The one that will win for this first question will win a MyTrade gym bag. Is that right? We do have a gym bag. I will send it to you. Just send us your information so we can hand it to you. This is the first question. So if you are reading this every day, you will know the answer to this question. So for our analysts, you can have your water break. What is the main topic of our short takes today? Ayan, yung title in front. For those of you who are not yet members of MyTrade, short takes is our daily report that our analysts are publishing. This is to have an insight what to focus on the for the day. This will have a few commentary on different types of sectors or sometimes different types of stocks for the day, but not everything. So for the first question, what is the main topic of short takes today? Ayan. The first one I saw is from Michael Corpus. This is right? Digital banks. Ayan. Congratulations, Michael. You won a MyTrade merchandise. Just go ahead and send us your name. We will have so send a message that you won. Take a screenshot of this. So just to make sure that we'll have a reference, and then we'll give you a form so we can give you we can send you the MyTrade gym bag. Yeah, thank you so much. So later on, we'll be asking some more questions to our audience. Okay na. So round two of our question and answer. Right. So this is actually a lot of people are asking about tech. So let me check this question right here. Okay. Question po about tech since it was recommended last year. What factors po will still maintain we still maintain to buy it to buy but it's still going down? What factors it is siguro what are the factors that make the price go down? Are there problems in the company? Baka yun yung ibig niyang sabihin.
Can I start na lang and maybe others can add to it. We
Yes.
recently wrote about, actually ang daming questions about tech na, so many comments today. We wrote about it a few weeks ago. Basically, we're still bullish on tech even though the price lately has been going down. We think this is actually a good opportunity to buy tech for the long term or for the medium term. One of the factors that people are asking about is how will the chip shortage affect tech. I think I saw some comments mentioning that. Actually, this is actually an advantage for tech because it was the management discussed in our last roundtable discussion with saying actually that they have enough inventory despite the shortage of chips around the world, and they will be able to service their orders, so they will actually be in a better position than their competitors, especially the ones from Malaysia. So this chip shortage is actually an advantage for them. Also, the recent fundraising allowed them to lower their financing costs, so that will add to their margins. And as I mentioned earlier, their valuation, especially compared to their peers in the region, is very attractive right now. So that's why we are still buy on tech. Maybe there is a technical analysis.
So I'll tell you my view, traders' view on tech. You see the price actually at the lower level for a lot of people on a year-to-date basis, tech is down. And that's really because of the overhang when the rights issue or SRO was done. Once the overhang is done, this is much like LTG's recent drop because of the large foreign selling. It should bounce back, and timing it with third quarter numbers and fourth quarter numbers, which we expect to be good. So I think for those that intend to buy and hold, it's something worth doing, holding it for a little while longer, because third quarter numbers and fourth quarter numbers we expect to be much better than the past.
Okay, how about
Thank you.
technical? Maybe they want to know the technical aspect of tech as well.
So as you can see in the chart, the key level to take back for bulls to take control is about 480 on the weekly chart. So hopefully when price goes back above 480, it can start to trend upwards towards this descending channel here, which represents resistance. So looks like it's going to take a while to overcome the overhead supply. The key level is 480.
Okay. All right. So next question. If you still have more questions on tech, just go ahead and post it on the comment section below. All right. So just a few shout out from Rajel Joshua Banaras watching and listening from Abu Dhabi, United Arab Emirates. All right. From Facebook user, please register your name so we can give proper we can address you properly for those who are using Facebook um, in the while watching StreamYard. All right. So from Joseph Olaget Jr. For a fundamentally good stocks, would it be better to cut loss if the price goes down or do peso cost averaging? Thanks. I think this is a good question. Because this is in a different view that what we have in our March playlist. So this one is like a broader view of, if you're gonna buy more when the stock goes down, or you're gonna cut loss as a
Let me try and answer this on the trader's point of view, since I'm not as good on research issues anyway, and I trade almost every day. Well, it depends also on how much money you've got, Joseph. The reason is if you have sufficient funds and it's a fundamentally good stock, and you don't know when it's gonna bounce up or make the run. Clear example is East West Bank. We think it's undervalued, but the price move isn't now yet. So, and if you don't really need the cash or you don't have another issue that you want to switch that will move sooner, maybe it's okay to hold. But I think you should cut if you think the reason that you bought the stock no longer is there. That is how you should approach that particular issue. If I bought this stock, a fundamentally good stock for this reason, and it should move within this time frame, it hasn't happened. So if the reason you have bought that stock no longer is true, then it makes sense to cut loss and switch to another one that you think will move faster and sooner, because obviously you are looking at the time factor into your trading posture. So that's my view. Nobody's perfect in trading. Go ahead, sir.
Yeah, just to add to what Sir Paul pointed out, which is I think very, very insightful. For me, yeah, the opposite of that is that if the story, if the story of the stock is still intact, then my go-to decision is to average down. However, I think we should also be mindful of the exposure. We can't keep averaging down every time a stock goes, every time a stock declines, because baka hindi natin namamalayan, sobrang laki na ng exposure natin dun sa stock na yan. So I think, if the story is still intact, if the fundamentals are still good, my suggestion is to average down, but also be mindful of the exposure. Siguro we should allot a certain exposure lang when we're averaging down.
All right. Next question. We will move on. Please give insights on Dito from Orlando Velasco.
Okay. Thank you, Orlando, for your question. We actually wrote a very long focus on this in our previous short takes on Dito. We actually commended its very impressive subscriber acquisition. So in a span of 7 months, the stock of the company was able to reach 3 million subscribers, which I think is very impressive compared to Digital, the one operating Sun Cellular, wherein it took them two years to reach 1.5 million subscribers. But in fairness to both companies, they were Digital's entrance to the market was back in, I think, 2003, if I'm not mistaken. So the economy was coming off of the financial Asian financial crisis, and also after the impeachment of Arab. So I think the economy was still trying to get back to its feet. So that's the economic background during that time. Whereas this time around, Dito is also not without its own challenges, because it performed its commercial operations in the midst of the pandemic. So I think that's also a huge obstacle, but nevertheless, it was able to reach 3 million in a short span of time. And also we besides the subscriber acquisition, which is very good, they're also offering a very enticing and attractive promos. The if you check their mobile app, it's priced at 99 and 199, and the promos are very encouraging, which I think is the primary driver for the fast subscriber acquisition. But I think these attractive promos have to be have to be wound down along the way, because in order to make the business a more sustainable. So having said all these impressive subscriber acquisition and attractive promos, we're still mindful of the potential headwinds. Number one is the SRO and FOO, which we think can be priced. It's possible to be priced below 7. And I think the anticipation for these two equity raising exercises is challenging the stock's performance. And also another headwind is that we need to see first how effective is the monetization of their subscribers, because ayun nga, it's hindi lang tayo dapat sa subscriber count nakatingin. We should also look at how effective is their monetization strategies. And I think lastly, since haba na nung sagot ko, one thing that we haven't looked at yet is the churn rate, which I think is also very important. Churn rate, that explains kung how loyal the customers are to the service provider. So kung mataas yung churn rate, that means hindi nagsistay yung mga tao. Kaso the churn rate can only be observed after 12 months. And ang commercial operations ng dito is still, I think 8 months pa lang, 7 to 8 months. So hindi pa natin alam kung gaano kalaki or kaliit yung churn rate. So ayan, so there are both positives and negatives. But the impressive subscriber acquisition makes us more positive on the stock. Pero ayun nga, we need to wait pa for further development.
Herman, dito the stock, can you give us like a review of what does it comprise of? Kasi I'm pretty sure there's dito Telecoms and there's dito CME. So for those who probably are not too familiar with it, can you just give us a bit of a background of that dito stock? What does it comprise of?
Okay, so very briefly, yung Telecom mismo is dito Telecom. Whereas dito CME, ayun yung listed stock na alam natin. And then dito CME owns 53.4% of dito Telecom. The rest is owned by China Telecom.
Yan. So just can we have so another question from the audience, so we can have more questions be answered on this round. For JFC naman, is JFC FOO a good medium to long-term investment?
Just to clarify, JFC is not doing FOO. They're instead doing preferred shares. Yeah, they're doing preferred, just to clarify. But overall for JFC, we're still underweight on JFC because of the impact of the pandemic, not only here in the Philippines, well, particularly here in the Philippines, but we've also seen there's strong businesses in, for example, in Vietnam that are now being affected because of the pandemic, and it's quite a huge hit for them, and margins aren't returning soon enough. And on top of that, we've also seen some outbreaks in key areas for their new acquisitions. For example, for CBTL, they've been hit much in Malaysia. So overall for JFC, I guess their revenues aren't still there, though their bottom line are improving. But based on our valuations, we're still underweight. For mid to long term, I would say that we would rather wait, especially the uncertainty that we're seeing, the variants, the resurgence. There might be better options at this point.
All right. So, okay, so just to clarify, that's JFC preferred shares with two series. It's A and B. We have recently sent the subscription form for that. Do you think it's even given the rate that was given to by JFC, is it competitive against other peers in terms of preferred share dividend rate, like the 3-year and the 5-year?
I
If
would think
like they're into preferred shares.
yeah. As far as I know, they were how do you say this? They were benchmarking at the indicative market rates. So that's why we're seeing the 3-year and the 5-year more along the market average. So yeah, I would say it's fairly competitive.
All right. So just
Trainer, what's the rate? What's the indicative rate?
I think the 3-year would be around 3 point. Oh, sorry.
Yeah, 3%.
Yeah, 3%. I think 3.2 to 3.5. Yeah.
Here.
Okay. To the Facebook user, just to add into that, keep in mind that the preferred share is a debt instrument, and so yield in the issuer is important to you. In the case of REITs, for example, the rental yield is like your quote-unquote interest benchmarking, except that yield is dependent on rising rental rates or declining rental rates, or just not having the units or facilities being rented. So understand the risk that you may have. So if it's a good issuer, chances are the tenant won't leave. If it's a so-so issuer, you reach the issuer of the REIT, you'll have tenants leaving with a lot, lower, with a lot higher vacancy rate, and so the yield will eventually come in. So depend on how you look at it. The preferred is more like a fixed rate to the people who bought it. Okay, let's move on.
All right. So next is there's a question about East-West short term. What do you think of the short term? All right, here. From Judy Hustado, good day. What's your take on East-West for short term? I think this is a technical question.
Okay, so this is the weekly chart of East-West. Well, in the short term, it's hard to say what will happen in the short term because it's trading at the previous support here from May 24, this previous low. It looks like it's at a level that can be positioned for the long term, but for the short term, it's much it's harder to say what will happen in the short term because it's not yet oversold.
Isaiah, thank you. There was also a couple of other questions why we recommended a particular stock for a long time. Sorry about that. I think we strongly recommended BDO, Metrobank, and the larger banks. No, in the case of East-West, we've also recommended it in terms of value. Just as a recap, banks today are not lending new loans. So if you're borrowing money against even you're buying a condo or building a house, it's not very easy to talk to your friendly banker now. So keep in mind, as long as this pandemic is there, the main concern of the bank is making sure they don't increase or have more bad loans. That's their first and biggest concern. So nobody's lending. No matter how liquid the market is, they're not going to be lending or making new loans unless you really, really are a very good customer. So this is primarily the reason. This is also the reason why growth in the smaller banks compared to the bigger banks is a little bit harder to see in the near term until after this pandemic. Because first, people aren't just lending. Now, East West and Union Bank at one time, they were very large in all of these teachers loan or employees loan. Today, that's going to be hardly the case. You don't want to be opening up your loan book. So as I think, the large banks will make a lot of money and will continue to make a lot of money because if you're a depositor, you just go to the larger banks. And if you're a smaller bank, you won't do that. And so I think what's critical is to see how long we all have to wait before this pandemic starts easing up. It's very, very critical to almost monitor, follow, and see how it works. Rainer earlier said about Jollibee, Vietnam case. Vietnam at one time managed the pandemic very well, and so it was like life as usual. So all the restaurants was like normal. And the moment the virus case, the Delta wave came in, the COVID cases go up, then all the restaurants start shutting down. So that's when Jollibee gets hit really bad because it's a dine-in restaurant primarily. A lot of, even today, dine-in restaurants hasn't really recovered because, I think you're allowed, 10% and hopefully 30%. And it's not whether you're allowed, it's whether people feel safe dining in an enclosed restaurant or not. So keep that in mind. But we say in the long term, banks will do well and the stronger banks will do even better. Thank you. Let's go to the next question.
Talking about banks, there's another question about banks, which is about PNB and BDO. Thoughts on this, Bess?
Yes, actually, I saw several questions about almost all of the banks that we cover. To cover all of those questions, we're actually overweight on banks, but we have a sort of long-term view or post-pandemic view behind that overweight recommendation, because right now we believe that the worst is over for the banks. Loans actually have although in the past few months they've been contracting, it's actually bottoming out. So it may stay there for some time until we're actually out of this pandemic, but it's not going the contractions that we may see going forward will be not as will probably be very minimal. And when we look at that's for the whole sector. But when we look at which banks we're recommending, especially if you're a Mart subscriber, we're recommending BDO, Metrobank, and East West. And we are actually neutral on PNB and SecB. I think there was a question also in the comments about SecB. This is because we're looking mostly on which of those banks are able to take advantage quickly once we're out of this pandemic. So the way we look at that is which ones have very low non-performing loans level or non-performing loans ratio compared to their total loans. So specifically for BDO and Metrobank, their NPLs are very low. They're actually almost they're below 2%. So even in a non-crisis, even before the pandemic, that's already a very low NPL ratio. So they've actually that did increase last year. They've actually been able to bring that down back to near post pre-pandemic levels, and also these banks have also been able to maintain their net interest margins even though their loan books contracted during this pandemic. So they're actually very ready to lend when the market conditions are less risky for them. So that's part of why we're bullish on Metrobank and BDO. So for PNB, if you look at the NPLs of PNB, it's actually not very good. They have one of the largest NPL ratios in the sector right now. That's because they have some legacy NPLs from the savings bank that they acquired from Allied Bank. So they're still trying to work that out, and we don't think um, uh, there might be a possibility of them needing to make more provisions, although not as big as before, but there will still be more provisions in maybe in the fourth quarter or even the next year because of that high NPL ratio. So that's why we're neutral on PNB. For East West, they actually have a relatively high NPL ratio if you compare that to the bigger banks like Metro Banks, BDO, and um, and its other even its smaller peers. It has an NPL ratio of around 8%, I think, which is very high if you compare to the bigger banks which have low single digit NPLs. But there's a reason behind that. It's because they have concentration on consumer loans, which are even before this pandemic happened, it's inherently riskier than other types of loans such as corporate loans or small business loans. Um, but to compensate for that, East West has a very high net interest margin compared to all their competitors, even the big ones. Their net interest margins um, before pandemic was around 8%. During this pandemic, it went down, but not as much as their the other banks. So it's around 7%, 6 to 7% right now. So they it that advantage that they have over their competitors, it didn't diminish proportionate to their to the in, to the um, and higher NPL level that they have. So that's not that's we give banks that have a large exposure to consumer loans a larger leeway in the level of NPL that they're able to hold on in their books. And also we are still bullish on East West because most of the NPLs that they have are actually secured. So they have collateral behind it. So, and also management previously said that even though they're technically NPL, these are they're confident that these borrowers that they are talking to continuously will be able to to move that NPL status to current status. The problem with this stock is it's become very illiquid in recent months. So that's probably why even with the very low valuation and our bullish outlook, it's not moved significantly in the past few months.
Ayan. So since Bess already covered most of the banks, we will move to other sectors so we can give way to the other questions that we have. Guys, thank you so much. If this is just your first time to tune in with us, this is the roundtable, this Q&A with a subject matter expert, of course, with Sir Paul. So we are now at least 333 viewers watching us from different parts of the globe, and we would like to really say thanks and appreciate everyone who's staying in and trying to get a hold of what's our insight about the market. So for the another question for tech naman, from Menardo Ricasio, I say a point of view, yun talaga yung sinabi niya, about three big property stock. Ayan, so probably can discuss briefly Ali, Meg, and SMPH.
Yung tinitingnan yun ah. Well, so far, Ayala Land is still hanging on to this ascending channel. On by Michael.
Yep.
This ascending channel. So if you can break above this downtrend line, then it should be able to muster further strength towards the upper end of the channel. But it remains to be seen if it's going to happen. So most of the property names all pretty much look the same. Eh? What's the other stuff? Meg.
Meg.
Meg. Of the two, Meg is probably weaker. Meg is weaker here. So
Can you maximize your screen? So it's going to be bigger. There.
So Meg also at a critical juncture here. It's basically at a decision point. If it breaks this low to 79, it could really continue lower here. So this is a key level to watch to 79. I think it's some stock. It's other stock.
SMPH. So for Meg, do I touch it? Do I stay away from it? What do I need to do if that's the case?
It looks like an avoid.
Avoid. Okay.
SMPH. Pretty much the same thing. There's not much to do with SMPH going pretty much sideways with no really strong direction, so it's not very difficult to trade. Also, probably an avoid as well. So
are they all of three avoid, or is it how?
It just doesn't look very appealing at the moment. There are probably better things to trade.
Okay. So yeah, and there you go, Menardo. That's the technical view for Ali, Meg, and SMPH. So we can answer more of the questions. We'll push the pop quiz later because there are a lot of questions that being raised and we want to answer as much. For Sir Paul from Lida Aquino. Your thoughts, sir, in investing with long-term outlook, 3 to 5 years between REITs, RCR, MREIT, and preferred shares like JFC?
I think this is related to one of the questions on interest rates now. US, just let me address that question of one of the viewers that wrote it. I was reading through it. It said, with the US interest rates firming up, how will this affect the Philippines? No? So eventually we'll all catch up. Interest rates will, in other words, if we're below US interest rates, eventually local interest rates will also rise and follow the US interest rates or even higher, depending on inflation and et cetera, et cetera. Because otherwise people will start playing arbitrages and that will then make the market more reasonable. However, answering your question on the three REITs, and the preferred shares, I want to take a look at it totally different. First, I would approach it as a trader and say, which one will give me the best yield, the preferred or I go into a REIT? Both preferred shares and REITs are actually long-term oriented instrument. Although REITs have has a lot more liquidity than the preferred shares. Keep that in mind. REITs is fairly actively traded compared to preferred shares. The previous issuers that have done that. So if I was to use my money, I would then choose the REIT. And Herman has strongly recommended Megaworld for all the good reasons. And I tend to say, it gives you the best yield today, number one. Number two, rental, I doubt will drop much more than where it is today, because we're, I think, in sort of like, it couldn't get worse scenario. Let me quote unquote that. The pandemic that we have is in a state where we hope it couldn't get worse. But I actually think we are just about in that stage unless we see a new variant again. But we all hope that all of this will be over with, and early next year, I think travel will be allowed by around November, December. So the airline and macro Asia should pick up before that time. So at the first time that people will fly, that will then start to look better. And then going back to your REIT question, I would buy the best yield REITs and hold on to it because rental will be higher over time, and so your yield will even be better, I think, than what you're getting today. That's my guess, So that's my thoughts on this. I don't like preferred shares unless they're paying you 6% over a 3 to 5 year horizon. Bank time deposits are definitely much lower. So the issuer of the REITs are quite strong in terms of being fundamentally sound. So if you want fixed income, I think choose the best REITs possible. I hope that answers your question. Uh, Let me go to another question. Rainer, there was a question on what's your insight on Cebu and Macro Asia? What's the lowest support and when will they be profitable? But before you cover that and cover it fundamentally, keep in mind that the stock market price moves in anticipation of reality. In other words, before the first plane flies again to Hong Kong or the other countries on a tourist basis, the market price would have moved. If you saw the price of Cebu Pacific, actually it dropped quite low, Cebu and Cebu Preferred, but then it started firming up when the news that Cebu Pacific's increasing, or PAL increasing their flights because the U.S. is opening the country in November for vaccinated tourists. And because tourism is a big chunk of every country, it's every country. There's no one country that doesn't like tourism, ours included. So we only push for local tourism because we don't want to push going abroad, things like that. But eventually, people will start booking. Look at the airline company. They're starting to send you emails and promotions as well. So we're not too far. We may be able to travel in about 6 months' time. Well, I hope so. So your insight on Cebu and Macro Asia, when will they become profitable?
Yes, thank you for that, Sir Paul. Just to add to what Sir Paul said, this industry is one of the heaviest hit. It's said to be the first to get into the pandemic and the last to get out of the pandemic. So the bigger question, as we've heard from Sir Paul, that they're gonna fly again soon. But I guess the bigger question is when will they be profitable? Because they've been bleeding cash for the past 1.5 or almost 2 years now. So I think their capacity is still around 25% of their usual of the pre-pandemic level. So it might take time for them to see profitability. So I think last year it was projected that the flights will resume back to normal or back to pre-pandemic levels by 2024, although that was last year. So now we've seen the different variants. Just like any flights, I guess we've seen delays into the recovery of Cebu and Mac. Although to add to the possible lower support, so for SEB and the preferreds, we might have seen a psychological support around 38. That was the SRO price and the opening price for SEB and SEB CP. So I think based on the price today, there was a bounce around that level. Just to go back to the question of profitability for SEB and MAC, it might be we can say that for 2022, international flights might still be a challenge. Although what will drive these companies, particularly SEB, will be the domestic flights. We've seen several regions or areas, cities like Davao, they don't have or they have minimal flight restrictions. So the Philippines being a archipelago with many islands, I think that is an advantage compared to its foreign counterparts. For example, like CX, they barely have domestic flights, so we might see them see their profitability maybe around 2023, the earliest, siguro.
Is the excitement of people traveling will help, you know, make this timeline shorter than we expected? Because I think like just Sir Paul, he really likes to travel already, and I think most of us already has the same sentiment.
Yeah, I would think so. Since I guess earlier this year, or even during the Christmas season, even if it was kind of a bad time to travel during the pandemic, we still saw a uptick in travel. So I guess we definitely can bank on the Filipinos wanting to travel again, see the world, see the rest of the Philippines, and that's I think we all share the same sentiment on that.
All right. So another stock. First, before we go on our water break, and we'll have another pop quiz. Last question will be from Zoe Otaza. Is CLI a good stock? That's Cebu Landmasters. Ba't natatawa si Herman? Is that yours?
All in ba?
Do we cover that?
Do we cover that, Herman?
Not as much as the bigger players, sir.
Okay.
But okay. First off, I think the 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 stock div was it this. Okay, I think the stock div was able to do. I'm not sure if it's a stock div or stock split that the company recently held. Yeah, I think it's a stock div. Anyway, so I think the stock div did wonders for the company because I think it infused more liquidity for the stock in terms of volume turnover. But besides that, I think the company was benefiting from the pandemic in a way that buyers prefer to purchase properties outside Metro Manila, wherein because of provinces where I think were less hit by the pandemic, and the quarantine protocols were also less strict. That's why developers outside Metro Manila, such as CLI, was able to benefit from that, and also bigger developers such as the Ali, Meg, RLC also noticed that trend that buyers were preferring to buy outside the capital, wherein quarantine protocols were less strict. But despite that, uh, I think CLI is mostly just flying under the radar because of the more popular or um, more the bigger and the more popular companies are must has they have better liquidity than CLI. So even though CLI is uh, consistently turning profits with double digit growth on a yearly basis, um, I think it won't reach the valuations of it won't reach the valuations that are commanded by the bigger players.
Okay. So, okay, given that, we will have our other segment that will be the quiz. Okay, for the quiz, okay pa kayo, yung mga viewers natin? We're still at the level of 300 viewers right now, and people are tagging their friends. I think they're getting some insights in this Q&A portion. So keep the questions coming. I think this is not going to be the last time that we'll do it, especially at this point that we will have this segment, the roundtable, moving forward. All right, for our pop quiz, here you go. I just need to flash it on screen. All right. So what is, if you have seen our last Wink event, what investors need to know? What the last stock we featured in our Wink event. Ayan. So the 10th person to answer the question, there's a little delay, mga few seconds delay. So I think ayan. So the tenth person on screen that we are seeing to answer this. 1, 2, 3, 4, 5, 6. All right, thanks po. 7, 8. All right, so wait, nasa na yun? Tolitz Ramos. It's MREIT. So we featured MREIT, their chairman, Sir Kevin Tan. Ayan. So, and in the upcoming Wink, we will feature this, not going to be an online thing, but we will feature the
the terms in JFC preferred shares. So we will want you uh, to to get an insight the type of preferred share, what are the things to look at, because as mentioned here, it's a cumulative, non-voting, non-participating, yan, yung mga yan. Those terms, we will feature it on the next week. So catch that. Make sure that you tune in our all our social media. So if you are on Twitter, please follow us on Twitter, on our Facebook channel. And also, if you like all of these things, please do share our Facebook page and our channel to your friends and family members. Open a MyTrade account and you'll just see more of this. This is just the tip of the iceberg. All right. So, Mr. Tolitz Ramos, please PM us so we can send you the form. So we'll be able to send you the travel pillow of MyTrade. Ayan. Next, so just continue to be with us later. Later, after all of the Q&A, we'll have our last pop quiz, and we will give you a book and another gym bag. Ayan. So let's continue. Congratulations, Mr. Tolitz Ramos. All right, for the next question, this is, kanina ko pa nakikita, another stock na I think nagkaroon ng medyo na park siya a bit. It's IMI. So I'm just trying to look for it. Thoughts on IMI? Are we still bullish in IMI? Why, if we are, why are we still bullish in IMI? Who's covering IMI? Ayan. Okay. From Rolando V, your thoughts in electronic semiconductor manufacturing sector like IMI. It's just one of the questions about IMI, but to cover IMI in general.
Yeah. Okay. Thank you, Rolando V, for your question. I think this is one of those stocks na related dun sa question nung earlier na nagtanong. Yung kapag bumaba ang fundamentally sound na stock, do you cut loss or do you average down? I think this is one of those stocks na kahit bumababa, the long-term story is still intact. So the chip shortage is currently being prolonged by the surge of the Delta variant. But still, even if despite the ongoing chip shortage, we still believe that the long-term mega trend for electric vehicles is still intact. So we think IMI still has a bright future ahead, especially when we get out of the pandemic. Okay, alis ata si China.
Wala ang host natin. Anyway, there's a question here that you may want to just answer, whoever covers this. Are we still a hold on FGen after the tender offer? Who's covering FGen?
Me, sir. Okay, thank you for that question. Okay, for FGen, actually we're a bit worried about or we're a bit cautious about on FGen because of two factors. First, the tender offer, assuming that it is fully subscribed, the tender offer will put FGen's public float below the minimum of 15%. And after the tender offer, the company has 3 months to remedy that below minimum public float. And we think because of the influx of equity raising from left to right, the REITs, the FOOs, we think it will be an uphill climb for FGen to conduct an equity raising exercise to put its public float at least at 15%. So that's one that's I think we're closely monitoring. And then second, it's about the Malampaya outage in October. So that will span for 20 days. And it's possible that it might get prolonged. And one reason why that's concerning is that FGen has four natural gas plants, so Santa Rita, San Lorenzo, Avion, and San Gabriel. Three of those, three of those gas plants are capable of running on liquid fuel, so there's no problem even if Malampaya fails to supply natural gas. However, San Gabriel, which has a capacity of 414 megawatts, is not capable of running on liquid fuel, which means it will be on temporary shutdown during the Malampaya outage. And I think that it's possible that FGen will underperform consensus forecast because of that. Having said that, we're still closely monitoring how management will plan to remedy the public float issue. So we still have to wait for the tender offer to close and to wait for an announcement from management on how they plan to push forward.
Just to add about the float of FGen, that the 15% minimum is actually not for to remain listed. It's a minimum to remain in the index. So that's why we're closely monitoring it. If it is not able to return to higher than 15% after the tender offer, there's a chance it might be taken out of the index. But it has until the end of the year to do that.
Thank you for the clarification. Yes.
Okay. So, at this early point, can we comment on all day? Because I think some of the audience are asking and wondering our take on in all day.
Hey, Rainier, nakamute ka.
Sorry. Yeah, I think I've seen a lot of questions on all day, and I think that speaks volume on the potential of its IPO. I would say it's one of the more interesting offerings that we'll see by the end of the year. What we can say about all day though, they haven't set their final offer price, but so far of the business, I think it's gonna be the fifth Villar stock that we're gonna see. And all day so far has grown that business in a span of 5 years. They're at 33 stores now with 25 dark stores. Dark stores meaning parang it's like a ghost kitchen. Just like you can order stuff, then it will be delivered wherever you are. And there's this synergy that is benefiting all day. All day is mostly located in the most of the Villar properties, and I think that will be a big help in achieving their goal of reaching 100 stores by 2026. So now, 0.8 post IPO would be around 40 times PE compared to its peers, so it's a bit expensive. So hopefully it will be lower. Come I think October would be the price setting for all day. Oh, and just to wrap it up, I think all day is also poised to benefit from the elections as what we may see for the other supermarkets as well.
Okay. So
yeah.
Yes, we will tackle more on all day and other consumer sector in our upcoming outlook by Sir Nikki Franco. So just please tune in. We will have that portion of outlook wherein we will concentrate on a certain sector, and we will have a guest speaker that we will try to get a hold of. So just tune in with us for that. Yeah. So we move on for more questions. All right, from Ian Facunbit, what are your thoughts for NGCP to conduct IPO aiming to offer 1.053 billion common shares? ERC is pushing them to conduct IPO. Any thoughts why do they need to be listed in PSE?
Yeah, okay. Ian Fankubit, thank you for your question. For NGCP, yeah, we also wrote about this in our short takes, but to summarize our thoughts, we like NGCP will be under SGP Synergy Grid, uh, and then we one thing that we really like, well, that one thing that that's a selling point for us for SGP is that it's a dividend play. So I think at 20 pesos, if I'm not mistaken, the dividend yield would be upwards of 7%. So I think that's for those seeking for dividend plays. I think SGP is a good candidate. However, one thing that's concerning us is that SGB will be heavily regulated, like Meralco and the other water concessionaires. So we believe there would be how do I put this in layman's term? The rate that they're imposing on consumers is derived from many components. One of which is the WACC, the weighted average cost of capital, and that is heavily dependent on interest rates. However, the WACC that they're implementing right now came from the third regulatory period, which expired in 2015. And then, if you look at interest rates have gone down significantly from 2015 and until now. However, the WACC that SGP is currently implementing is still the one that's based on 2015 levels. That means we think there would be a potential refunds, which could affect the dividends that SGP might pay shareholders moving forward. Rainier, the company recently held a briefing. If you have any takeaways also about SGP.
For SGP, I think one of them use of proceeds will be to increase their transmission network. So hopefully that will be beneficial for us. Since they're in the power transmission, and then the use of proceeds for SGP specifically will be for the preferreds for NGCP. So that would be for the capex. So I think the investment takeaway for SGP would be their revenue growth and more on their capex.
So
the question also asks, any thoughts why do they need to be listed in the stock exchange? Actually, they're already listed by introduction, by backdoor, no? I think basically any public utility or franchise business from the government, such as the NGCP, one of the requirements is that the company should be listed, as this requirement also refers to oil companies like Shell and Petron, for example. Let's move on to the next question.
all right. Okay. This is from Sherry Rose Gadapan. Is Converge and ASEN Energy good for long term?
Okay. Thank you, Cherry Rose, for your question. Yeah, sobrang lakas nitong dalawang stocks na to, no? Okay. Yeah, I think being included in the index did wonders for these two stocks as it increased their marketability, especially for Converge because it was also included in the FTSE index. So that definitely increased the marketability and the awareness of investors on these two stocks. Okay, for ASEN muna siguro. So si ASEN actually, kahit saan ko siya tignan, parang ang mahal niya na in terms of price to earnings ratio, in terms of enterprise value to megawatts. So that's EV over MW. Yeah, I think it's very expensive for me kahit saan ko siyang angle tignan. And also if you compare it with the consensus recommendations, it's already way above the general target price of analysts in the market. So I think for the stock, FOMO is already kicking in, lalo na ngayon na above, I think magko-close na siya ng 12 pesos. But for me, as a fundamentalist, I think this should not go on forever. The very expensive valuations of ASEN should not go on forever, especially if especially if the company's earnings fail to live up to the consensus estimates. One thing that the market should also consider is that yung the cash flow dun, kasi if you notice, sobrang dami nung disclosures ng ASEN about its expansion. So expanding your business is one thing, pero yung generating cash flows is another. So it's not automatic na mag-generate agad siya ng cash flows. So ayun nga, if the company fails to live up to the expectations of the market in terms of earnings, I think the stock should correct. So yeah, that's for ASEN. So I think it's very expensive at the moment, and I think we have to mostly rely on technicals on for ASEN. And then for Converge, I think the company is benefiting from the very low fiber penetration in the company. I think last time I checked, the fiber penetration is around at 11%. So it's a very wide open sea for Converge, and there's no need for intense. Kumbaga, the market can accommodate three broadband players. So there's really no need to eat into the market share of each company, because ayun nga, ang laki pa ng room for growth for broadband. For Converge, for at the moment we are a hold, as we think the momentum is still strong on the stock, and we think the growth, the strong, impressive growth being exhibited by the company will be sustained in the next few years. So for Converge, I think it will be we're a hold now on Converge.
Okay.
Herman, let me add to it. ASEN's mad rush going up has been fueled primarily by foreign buying. I think it's one of the top issues being bought by foreigners almost every day in the last few days, no? And so that's what's happened. So it's expensive by no matter how you look at it. And as we say in the musical chair, when the music stops, primarily when the foreigners stop buying the issue, then you may see the correction you are anticipating. The thing is, why are the foreigners loving this stock? It's solar energy. A lot of the foreign investors have certain criteria on the stocks that can be included in their portfolio. It should not be using coal. It should not be, detrimental to the environment and things like that. And so, solar energy being renewable is something that some of the funds actually need to invest in and want to invest in. And so, and ASEN obviously has the size now. So that's been one of the reasons. But then take a look at the chart. Isaiah, what's your view?
So, sir, the ASEN has basically been starting to accelerate here, as you said, sir, on net foreign buying. This is I'll just maximize this chart here. It made new highs and found support at the 20-day MA. So for those who have the shares, you would probably look to either buy closer to the 20-day MA to swing trade. So you buy low near the 20 and then sell when it rallies, or if you still have it, you basically just hold it until the support breaks, which is the 20-day MA. So looks like it can still hold this 20-day. So yeah.
So if you're holding it, if you're a person who has ASIN, you mean?
You can use the 20-day MA as a trailing stop.
Okay. Can we still buy it? We have to buy it.
Well, if you look at the RSI, it's already at 82, so it's probably due for a pause. So you're better off maybe waiting for a pause if you don't have it. That's the kind of trade you want to do.
Okay.
Just to add lang, since there's a question on Converge. Siguro for Converge, and someone's asking, so for Converge, not good time to buy now. For Converge, siguro maybe wait for pullback before entering the stock. And then for ASEN, siguro for those wanting an exposure, siguro AC would be a less risky and cheaper alternative because AC owns 72% of ASEN. So if you want an exposure sa ASEN, but if you want it to be to have less risks, siguro AC would be a good alternative.
Okay. So for Herman mentioned about pullback, Isaiah. What is the price that they can consider for Converge as pullback as a pullback price? And how well they're searching. We are going towards the end of this session, and please, if you have other questions, we will still have another session of the roundtable. This is just the beginning, and we would like you to maximize all the perks that you can get from MyTrade. So if you liked what you saw today, we can go ahead and talk to our customer service representative. Go to our website, open an account, and everything is online. You don't have to do or send anything, and you can get all of the access in terms of these types of questions, and we will also have tools to provide to you whether you are in passive or in active investing. Okay, go ahead, Isaiah.
So Converge is finding support at the 10-day.
Oh, okay. Wait. You're on mute. Wait.
So Converge is finding support at the 10-day MA. Usually by the time it finds support at the 10-day MA, it could be due for a very fast correction. So unless you're basically aggressive, you would try to buy closer to the 10-day MA. But if you're more conservative, you should probably just let it go already because it's already gone up a lot and very fast.
Let it go. Nako. Yeah, no, masyadong mag-hold on. Don't fall in love with the stock, sabi nga. All right. So for the final pop quiz that we're gonna have for today, it's a question that talks about a tool that we use here in MyTrade. It is being sent on a weekly basis. So for the last question, let me flash it on screen. If you are paying attention a while ago in the beginning of this stream, we have actually given we have given a video about it, and I think a lot of our subscribers and clients like this particular tool that they use on a weekly basis. And okay, for the 18th, hindi ko sa 18th answer. Okay, so what is the newest stock picking tool of MyTrade that you receive on a weekly basis? Ayan. So on the 18th, pakibigyan naman sino nagpa-flash. All right. So I can see a lot of answers, correct answers. It's the Navigator. So just to let you know, while we're counting the answers. So the Navigator is our newest tool that we provide to our semi-active and semi-passive investors and traders. That this is a sortable app that you can use whether if the stock that we cover is a buy, is a sell, or a hold. So no need to catch up with all of this short takes. We know that there are a lot of reports that we publish, so we make use of this particular tool, and we will be showing you at later. We will just looking for the demo. We will show you later at the end of the stream what it looks like. But basically, the people already knows about it. So the answer, the winner for the Navigator answer is Miss, congratulations, Miss Victoria Limay. Ayan, yay. So you will win, you will receive one fundamental book from, that's BOSS book, and also a gym bag from MyTrade. Congratulations. Just please send us your details where we can send that. All right. So I hope, guys, you have learned a lot from today. I really appreciate all of the viewers that stayed with us until the end. But of course, we will not end this session without, I think Sir Paul has been observing the kinds of questions that you are giving us. And I'm really proud to our viewers that your questions are really not, the so basic ones. Na I think you are all learning in this journey. And Sir Paul would like to impart some words, especially at this time. Yes, Sir Paul.
Yeah, we come to the end of a long session, but I am watching everything and learning. Now, there's a lot of questions we didn't cover, and there's not enough time to really cover all of it. So maybe, China, there's something you can think of either through the Facebook community or other ways where our customers, the MyTrade holders, can send in the question, and then we in the group being researched primarily, and I will also pop in from time to time, give responses to those questions. No, so in other words, we'll try and answer everybody's question, but it's not going to be like as responsive as we try to do today. And in fact, I would say we're lucky if we covered 50% of the questions raised. No, so having said that, we'll continue to think of ways so we can understand what your questions are, your concerns, and we'll share with you our experiences, our insights, and because there's many insights into as you go into the market. A few months ago, or maybe even a year ago, it was looking at all the what we call the third liners moving up and down. Then suddenly the third liners disappeared, and some second liners starts moving up. In other words, the name of the third liners are the basura stock starts going up. And I think there was one session where I said, if you don't know what you're buying, don't buy. Because a lot of people were buying things that had no sense in buying. And then the people start moving into second liners, better stocks. And the foreigners were starting to show up, but not in good numbers. Now it's the other way around. The foreigners, the foreign buyers and local institutional buyers and large retails are now the dominant player in the market. So what does all of this tell us? Well, first, the market's getting more interesting, number one. Number two, maybe the foreigners don't think the country's going to get another downgrade in terms of its credit rating, and maybe the pandemic end is all within sight, and when sight means the next 12 months. So maybe things are looking better, and so if that's the case, then it's really time to take a serious look at the market, take a serious look at your excess cash, or what you intended to buy, and start looking at the best stock possible to buy. Because when the move happens, it happens very fast. I mean, you see issues moving 4% every day. That means in 3 days, it's up 12%. In a week, it's up 20, 30%. That's a lot of money. You're trying to earn 5% a year on your money. That's 6 years income, interest income. So if you think about it, investing in the stock market with the right issue is still the best thing to do. So having said all of that, there's a lot of change as well. What we're noticing, and I follow this every day, the foreign buying activity. From time to time, there's net buyer, but it's not really as important as seeing large buying and of foreigners of stocks. If you follow, I've been looking at the buying of foreigners, and then the last week or two, more or less pare-pareho is what they're getting. So there's the following, and so I think these are all good things that will come. So first, we will try and come up with something where we're able to address a lot of your questions, if not all of your questions, without having to wait for another roundtable or a briefing, so that then whatever is in your mind, we can cover. We'll try to be able to be as responsive, because I don't think you would be happy if you only see us once a month and we don't get to answer your question. But if we can take your question, and a lot of them are really good questions that we didn't cover. No? So China will think of a way. She's in charge of marketing and sales, and then the rest of the guy is part of the work team that tries and give you the answer. So be patient with us. We'll try and answer that question. There are also other questions on third liners, the fourth liners that we don't follow. I'm sorry, we don't follow, and it's very hard to give an opinion on small stocks or highly speculative stocks, because it's all a matter of who's buying and who's selling, and there's nothing fundamental to follow. So we'll just need the chartists, technicals to really help on that. So with that, I want to thank all of you guys for joining us, and we'll hope to see you again. I think the next briefing will be Nikki's market outlook. No, so Nikki's our head of research, and I think the team always makes the difference, but Nikki leads it, so we keep him separate from here, and so he has his own hour. So we'll have the hour of Nikki where he gives his outlook. Okay, thank you very much.
Thank you, Sir Paul. Ayan, there you have it. Guys, for the one Sir Paul was mentioning about the questions that we didn't answer, that's why MyTrade map is there for our experts hub. So if you have not seen the answer to the questions that you have for the subject matter experts that we have here, please post the questions on our map Facebook group. If you're not a member yet of map Facebook group, please type in or search MyTrade map and encode all of the questions that we need to verify, just to make sure that you are a MyTrade account holder, and all of the questions will be addressed there. All right. So, and also please tune in. There will be an upcoming webinar and an upcoming market outlook brought to you by your one and only Sir Nicky Franco. So with that, thank you so much, and we hope that you have enjoyed today's episode of 1, 2, 3. Sabay-sabay tayo. The round table. Ayan, hindi ko sila na-cue doon. Okay. Bye guys. Thank you. And you take care, everyone. Stay safe.
Take care. Thank you.